It's Monday, December 19th, 2022. The price for easy money is coming due. It's never been more apparent than it is now. We're watching the economy continue to erode. We're watching purchasing power erode. And now, the thing they thought could never, ever fall apart, the stock market is continuing to have problems. Dow Jones down another 162 points today. NASDAQ down another 159 points today. If the Fed doesn't come to the rescue, these markets are going to continue to plunge. And it is becoming more and more apparent that the Fed is not going to come to the rescue anytime soon. Could it happen down the road? Absolutely. Could it happen in 2023? Absolutely. They could pivot. They could reverse course. If they do, we are going to have major, major problems. But before we elaborate more on that, quick question. As I'm out here in the desert, a lot of people from all over the world come here. People from all over the country come here for the weather during Christmas. I'm not seeing the numbers of people I used to see. The local mall here, which is bankrupt, not a lot of people. El Paseo doesn't really look that busy to me. And areas throughout California just don't look that busy. Yes, people are driving around. Yes, some people are going to some restaurants. But it doesn't look like it used to a few years back. What's going to happen to the consumer after Christmas when they are maxed out and tapped out? What's going to happen? Because people are going to continue to spend. They're going to continue to travel through the holidays, see family. They're going to buy Christmas presents for people with money they may not even have. Some people still have money, but there's a lot of people out there acquiring a lot more debt to get through these holidays. We're going to pay more for this Christmas meal than we did in any time in history. Christmas presents are more expensive, and people are going to be maxed out and tapped out. So what are they going to do in 2023? The savings rate right now is 2.3%. That's unheard of. Are we going to see a 0% savings rate? Is it going to be a negative % savings rate? I don't know. But I think it's completely unsustainable when the average consumer in America has a savings rate of 2.3% and everything continues to go up in cost. You know, I was talking to a friend of mine today and we were wondering, are people really this dumb? Do people really not see what's happening? I mean, there are people out there that believe the economy is thriving, recovering, that the economy is fine. Most people would disagree with that though. But there are people who believe everything is going to be okay. But are people really awake to what's happening economically to this country, what's happening in this economy? I don't know. You know, I watch these shows on TV and, you know, they say, well, the average consumer isn't dumb. The average consumer is awake. The average consumer is aware. Are they? Is the average person really awake and aware of what's going on? If they were, how come so many people are maxed out and tapped out? How come so many people are having their cars repossessed right now? How come so many people are underwater on their homes right now? How come we have record credit card debt now in America? And yet we still have people spending money, still going out to eat, going to buy Christmas presents they can't afford to buy, but they're just going to do it because. People just cannot relinquish that lifestyle they've had for so many years. We're going to witness, in my humble opinion, the ultimate wealth transfer in history. It's coming, and it has begun. The wheels are in motion right now. And you know, me personally, the only thing I continue to buy is gold. I continue to put cash away. I continue to keep my bills at a minimum. And I continue to detach as much as possible from the system. That's what I'm doing right now. And I think really where it's going to be in 2023, it's going to be property, it's going to be gold, it's going to be cash. That's where it's going to be. Home builder sentiment drops for the 12th straight month, but a bottom may be near, according to CNBC. What great news. The bottom may be near. We're now at the lowest level since 2012, but the bottom may be near. About 62% of builders are using incentives to bolster sales, including providing mortgage rate buy-downs, paying points, and offering price reductions. Soon they'll be offering cars and boats and RVs for you to buy a house. What does the small builder do now that maybe can't do this? The small builder is going to be eviscerated, and I do believe that we're going to see some of the larger builders eviscerated also. This is going to be catastrophic in the housing market, without a doubt. There was an article I was reading today that really stood out, and it was on the Wall Street Journal. Wynn unloads $300 million in personal real estate. $300 million of personal real estate. Steve Wynn. What does he know? Why is he doing this? Is he raising a bunch of capital because he knows what's coming? He knows what's about to happen in real estate. He's going to unload, raise all this capital and buy it back? I don't know. But I think it's very interesting that you have a billionaire dumping $300 million in personal real estate. So I think that it's something we need to pay attention to. Here's another thing. This came out a few days ago. Global self-driving truck company, too simple to lay off hundreds of people before Christmas. Have you ever seen a time where we are seeing literally layoffs daily and at the worst possible time during the holidays? This company based out of San Diego has 1,430 employees. They're looking to cut half. So that's going to be over 700 people they're looking to cut. We have gambled so much on EV and these self-driving trucks, and I think we're going to lose. I don't think it's going to pan out. We've invested billions upon billions of dollars, created these jobs that are unsustainable, and look at what's happening now. It'll be interesting to see what continues in the EV industry. You look at what's happened to Tesla stock and some of these other companies, they're being absolutely destroyed. What comes next for empty downtown America? I was reading an article, and it was just talking about, people not returning to work, these office buildings vacant. But people don't realize that there's so much business that depends on those office buildings being full. Hair salons, coffee shops, restaurants, you name it. They all depend on people being downtown working in those office buildings. You think about how many delivery trucks would go to service those buildings, go to service those businesses that surround those downtown office buildings. Nobody's going now. So what does that mean? What is that going to do to the economy? Yes, we have billions of empty commercial space, of square feet of commercial space that's not being occupied. Nobody's paying on these buildings. People who own these buildings are going to be destroyed or are being destroyed. Banks that are holding these notes on these buildings are going to be destroyed. Nobody has been talking about this, and this has been going on. We've been seeing empty commercial real estate for at least 3 years. Mostly in retail back then. Now all this commercial office space is vacant. What about the banks holding this? What is going to happen to them? Nobody talks about it. And we see all the little coffee shops, all the little restaurants, all the hair salons, and everything in between being absolutely destroyed. And I don't see this ever coming back. We are not going back to normal anytime soon. The economiccollapse.com. U.S. vegetable prices increased by a whopping 38% in November, but they say inflation is under control. Is inflation under control? No, I don't think it is. What do you think? But 38% more in November for vegetables. I mean, it's going to be a luxury at some point if you can have some broccoli or lettuce or some green beans. It's going to become a luxury here pretty soon when you look at the prices, which to me seem to be going up every week at the store. Wall Street Journal, federal deficit widened to record $249 billion last month. This just reiterates what you've been saying, what I've been saying. Inflation is not going away. Inflation is alive and well, and you need to be preparing for it. And this is why I hold gold. This is why I hold silver. This is why I've got all my debts paid off. There's still people out there that believe that you shouldn't pay off your debts. Don't pay off your car. Don't pay off your credit card, that it's all going to go away, that everything will collapse and it's going to go away. Take a lesson from 2008. Nobody was forgiven. 2 million people lost their homes. Millions of people had to file bankruptcy, and we saw a lot of businesses go under. So there's not going to be this forgiveness. No. That only happens to big corporations. It's not going to happen to you and your $14,000 of credit card debt. It's not going to happen to you and your $30,000 of auto debt. No. No matter what happens to the system, wealth transfer, new currency, new system, whatever, you are going to be on the hook for that debt. Don't go into this thinking that this is all going to be forgiven, that there's going to be some kind of reset, and that you're going to own your house, car, and everything in between outright for free. Not going to happen. There was another article in the Wall Street Journal a few days ago. I touched on this one on one of my past videos. Americans expect worsening U.S. economy in 2023, Wall Street Journal poll finds. Yes, a majority of people believe that the economy is going to get worse in 2023. Why are they not preparing? Why are they not getting ready? If you believe that we're going to be hitting some speed bumps here in 2023, you need to be preparing, and you need to start thinking outside of the box. You need to start getting out of the system. You need to start getting your debts paid down. You need to be getting ready. You know, if this recession does get bad enough, we could see the Fed reverse course. This could happen in 2023. Not to say it is. I don't know. I mean, you've got to think, what if the Fed is doing this on purpose? What if the Fed is going to bring us in to the greatest depression the world has ever seen? I don't put anything past them. This could be intentional. And you have to realize that this could be on purpose. Okay, say it's not, and the Fed reverses course. That is going to be a big problem for the US dollar. That is going to welcome in hyperinflation. That is going to destroy your purchasing power. That is going to destroy the US dollar. And at that point, if you don't have gold, if you don't have silver, you're going to be in enormous pain. Right now, we don't have rates high enough to fight inflation. And the Fed has to know this, right? I mean, if we know this, the Fed has to know this. I mean, I'm by no means an economist, but I understand the only way that you can push down inflation is by getting the interest rate higher than inflation. They're not doing that. And so until they do that, I don't really see the Fed beating inflation. So I think inflation is alive and well. I think we better get ready for a lot more inflation. The data, the news, whatever they want to tell us, I don't believe it, because all I have to do is go to the store with money, and it seems like every week I need more money to go to the store. So get ready, ladies and gentlemen. Get ready. I want to finish with this last article. It was on Fox Business last week. 83% of our pharmaceuticals are coming from other countries. Why? Why is that? Just think, we look at the amount of destruction that has happened to our manufacturers here in America. Everybody's moved away. And one of the most important things, medicine, pharmaceuticals, people need pharmaceuticals to stay alive, to treat an illness. 83% plus, I mean, in some reports I've seen it as high as 90%, is made in other countries. That leaves us liable to these countries who make these pharmaceuticals. If we get into a dispute, we get into an economic dispute, a military dispute with one of these countries, we're going to be in big trouble. What do we do? What would we do with people who need their pharmaceuticals right here in America? And it may be something even very, very simple, but it really leaves us very vulnerable that we are not making our own pharmaceuticals right here in America. In my opinion, we should be making everything right here in America like we used to. It seemed to be a better place when we did. People seem to have a better standard of living. We weren't dependent and reliant on other nations for pharmaceuticals, for oil, for plastics, for steel, for chips. It's incredible to see how much is not made in America. It's really, really sad. All the really good, well-paying jobs have left, and now it has made us vulnerable. It has made us reliant, and I think that's a very dangerous thing. Very, very, very dangerous, especially when we see what's happening across the globe right now, geopolitically, wars, and how quick we could just be shut off. What would we do? It's not like we can just build a factory or a pharmaceutical plant tomorrow and start making this stuff. So I'm going to leave it there today. I could go on. I don't want to rant. So much happening. We'll see what the markets do tomorrow. Who cares? The economy has collapsed, ladies and gentlemen. The economy has collapsed. And now we've got to figure out how to get through this, how to survive, how to prosper. And we got to all start thinking outside the box. Have a good day. I look forward to speaking with all of you very, very soon. God bless.